Welcome back to Daily Day Trades YouTube. Usually we would be going over trades and watch lists, but today was remarkably boring, besides everyone boycotting Bud Light for their new cans. So we're going to do something different today and going over one of the strategies that I use most frequently and effectively. The watch list will still, of course, be posted here, so subscribe to the channel if you like stocks. Before anything, we need to go over the setup for these trades. The only indicator we're using is the VWAP, which is the volume weighted average price. On my chart, that is this purple line right here. The VWAP is my favorite indicator. It's pretty much the only one I use, and it's superior to moving averages and such because it's not just giving you the average price. When the price is moving, a moving average will move. The VWAP requires a volume input to make any meaningful change in direction. In other words, right here we're looking at Tesla, and if this went up $100 right now on one volume, the move in our line here would be minuscule because the volume is only one. But if 2,000 people bought 100 shares each, let's just say at 210 somewhere up here, then we're going to see a significant move in this line. Oh, one important thing to note is that the VWAP can only be used on intraday charts. When you're changing intraday time frames from 5 minutes to 1 minute or 1 hour, it will stay the exact same, but it serves no purpose whatsoever in charting anything that's not intraday. As you can see here, it just goes from the middle of each candle to the other one. This does not tell us anything. A little tangent there, but it's important. So the VWAP shows us the average price paid throughout the day as a function of volume. So if you were to buy a share when it's right on this line, you're paying the average price of what all of the other shares have been bought and sold that day. That's why big hedge funds and investors will use this when they're placing a big order. It's to confirm that they're getting a really good deal for that day. Anything above this VWAP, you're paying above the average. Anything below, obviously you're paying below. And this is why it acts as such good support and resistance. Your VWAP is going to start at the middle of the first candle every single day because that is the only data that it has. Speaking of data, we need to go over the inputs that I have because someone for sure is going to ask about it. But here, you're just going to go to indicators and type it in. This is TradingView, by the way. And then we can see that I use this one right here. All of them are pretty much the same. Then up here, we can go to settings and see the inputs that I have. Everything on here is the default, and this HLC tab stands for high, low, close. Those are the prices that it's going to use to calculate where to put the line on the chart. And if you don't understand that part, it's not a big deal. The strategy does not require knowing exactly how the computer spits out this line. Now the cloud part, the little purple cloud you see all around it, that's where the standard deviation comes in. So I only have the first standard deviation showing. Anything within these bounds is going to be one standard deviation away from this line. A standard deviation is just a statistically significant number, a specified distance from the point in question, or in our case, the VWAP, and basically what it's doing is acting as a sort of overbought, oversold indicator. So here I would be hesitant to buy just because it is so far above that standard deviation. Alrighty, we are done with the setup, so let's talk strategery. What we're going to do is use this line as a landmark to tell us when to buy and sell. So as you can see here, prices frequently bounce off or get denied by the VWAP, and when it breaks through in any direction, that can signal a shift in momentum. What we're going to do is day trade these momentum shifts using options with short-term expirations. Step 1, wait at least 30 minutes. I know it's easy to get carried away thinking that you're going to predict the direction in the first 5 seconds and be a billionaire, but with options that expire in a couple days, trust me, there is still plenty of volatility to go around. Often these candles will stay close to the VWAP at the beginning of trading, but there will be big shifts up and down in the price. But since the VWAP is taking in the mean data and volume, it typically stays pretty close to the price. As you can see here, the price is moving wildly, but the VWAP is staying right here in the center. After your 30 minutes of timeout, we're going to wait for it to break and close below or above the VWAP in some significant way. Notice that I said close. So I use a 5-minute chart. It can bounce around for a while and end up tricking you to buying in the wrong place. So this candle here isn't really telling us anything because it didn't close below it. It came right back up, which could have just been a false alarm, so you want to avoid those for sure. Also, look at the previous candles and use any prior knowledge of charting that you have. Did it close above or below the VWAP at any point before then? And did it result in anything when it did that? So is this meaningful even though it already closed down here and down here? No, I would say that this candle is not very meaningful right now. It's still pretty early and it hasn't even reached the low of the day. This is going to be different every day, but ultimately you'll have to be the one to determine what is significant and what is not. You can follow my trade alerts if you'd like. There's a link in the description. It's only $9 a month, but if you want to do this on your own, you're going to have to be the one that determines what is significant and what is not. Unlike most of the losers on YouTube handpicking charts to make everything look easy, we're going to go through a losing trade first. So this looks like a good place to buy it right here. It meets the criteria and oops, it didn't work out. Look at it going up here. Welcome to trading. You can't be right all the time, and at least you don't have to be wrong in front of 600 people like me. So when do we know when to get rid of it? Well, you can have a set percent stop loss that you're willing to accept, or you can use the VWAP again as a stop loss. These trades can be really quick, so I'm typically keeping an eye on it while the trade's open, and once it looks like it's lost, no hesitation, sell it. Maybe keep an eye on it, but move on to the next one. When you do sell for a loss though, take note of that percentage loss because you can use that as a reference point when you're taking profits. Now we will go over a successful trade. We will buy here and it's going to keep going down. Everything is looking good, and how do we know when to take profits? Once again, there's a few ways to do this, but I'll give the safest one. Once you're in the green, remember that rough number from your stop loss and what that percentage would be, the maximum that you're willing to lose. So if you're willing to lose 20%, selling half your position at 20% profit will make the remainder of the play risk-free as long as you stick to that stop loss. So you're selling half at the same percentage that your stop loss is at, but on the positive side, the take profit side. Once I make sure that that risk is managed, I'll typically stagger my sales based on the momentum. This is where you can get greedy or take the money and run. Sometimes greedy works, sometimes not so much. In a trade where I have, say, 10 contracts, I will often sell 8 or something and then get greedy with the last 2 or even swing them overnight, and this can result in some really big gains if you do it correctly. This may seem really simple, but I can attest that it does work, and if you understand how all the pieces work together, then you'll understand why this simple idea could be effective when used and managed correctly. That is the tricky part though. Sometimes it's hard to tell if you're doing something wrong when you think that you're doing it right. So if you want to see how I use it, I post trade examples on this channel all the time, or you can get trade alerts through the link in the description. I just changed it to $9 and there's still a free trial for a week. So in my biased opinion, it is more than worth it to give it at least a shot. That's all I got for today. Drop a like on the video if you enjoyed it, comment any questions, and check out that link if you're interested in the alerts. And I'll see y'all tomorrow morning.